Good day. This is Calvin, Professor C here. So I know that I am supposed to release the part 2 of how to choose the right mortgage brokerage for you guys. But then I suddenly remember a topic that is very timely because right now, as you can see, right now is December the 23rd. And there are only a few days left for 2020, and thank God for that. But um, there are also something that is very important for you to, you or your client to do if you want to utilize what I'm going to teach you today. Now, what I'm going to teach you today is a little bit complex, so I hope you bear with me and try to understand the most you can. But it is a trick that I teach one of my actual client to use to lower the mortgage rate without actually paying a penalty. Now, before I continue on, I want to let you know that we just have the new live workshop for January that has been scheduled on my website, which is on here, which is mortgagehackercanada.com. So if you find that a lot of my video is useful and you would want to learn a step-by-step way to actually do your daily work, to structure a case, how to approach the case when a client to call you and say, hey, I want a mortgage. You know what? Join us on the live workshop because I will be teaching you live, so that if you have anything that you don't understand, you can ask me right away and I will answer you right away. It is in a small group setting, so you will always have your chance to ask your question, and I will make sure that you understand everything before I move on, right? So if you want more information or if you want to sign up on the live workshop, the link is right there. If you cannot afford the time to do the live workshop, but you still want to get advanced knowledge about the mortgage industry and the mortgage career as a mortgage agent, you can join my membership. Join my membership, and the link is also there. We have had very good time about the live question and answer every week, and we have a lot of people there. We have shared a lot of very useful idea. Everyone enjoy the hour every week so much, and I'm very happy that I can provide additional resource to them, and everyone is learn something that is on top of the YouTube video, because YouTube video can teach you so much. The interactive, the share of the idea, the bounce of the strategy is so much more enriched in terms of the knowledge. So you can join that too. And if you do not want to interact with anybody, you can watch my YouTube video or you can buy my book on Amazon. Anyway, enough of those advertisements, because today I am going to teach you a concept that I actually teach my client to utilize to lower the interest rate of their mortgage without paying a penalty for their mortgage. So as you know, a lot of the client right now would probably be calling you and say that, hey, you know what, Calvin, I actually want to maybe thinking of paying out my mortgage because I have locked my mortgage at 3%. And that is like just a couple of months ago. You are, before COVID, you are about to go get a 3% mortgage, and that's very common. And they say, well, right now the mortgage is like 2% or less, right? So does it make sense for me to pay off the mortgage and pay the penalty and get a 2% mortgage. But the penalty is pretty expensive. Is there a way that, we don't have to pay a penalty, but we can lower our mortgage rate? I heard something about blend and extend. Is that what you're going to teach me? And my answer is no. Okay, so I am going to teach you an advanced strategy that you can teach your client to use, and there is absolutely no penalty whatsoever, but the interest rate of the mortgage is going to go down. So how you do it, you may ask. Let's look at it right now. So this strategy is only useful if your client has a mortgage that is like collateral charge. So if they are having their mortgage at TD Bank, then it's a HELOC. If it is in Scotia Bank, it's called a step mortgage, and so on and so forth. Every bank has their own name, but either way, it is what they call, let me take a look what each bank is called. Let me take a look at that. The TD Bank is called HELOC. The Scotia Bank is called STEP. Royal Bank is called Home Line Plan. BMO is Home Owner Ready Line, and CIBC is called Home Power Plan. So, you can see that that's why I am confused and I mix up all the names. But, you get the idea. So what those plans are is usually, as you can see on the screen, like say that the client has a mortgage of $500,000 at 3%. And when they got the approval of the mortgage at the initial stage, they actually got approved $600,000. So 500 of them would be in a mortgage, and $100,000 would be the limit of the line of credit, right? So this two side would always equals to $600,000. Okay, so you say, wow, 3%, $500,000. How do you lower the interest rate, right? Now, let me tell you, first of all, every single bank that I just mentioned, they allow the client to put in a proportion of the, like a prepayment from anywhere from 10% to 20% every single year with no penalty. So the bank that I just mentioned, like CIBC, TD, BMO, Royal, and Scotia, they allow you to put in a prepayment of anywhere between 10 to 20% every single year without any penalty. So how you utilize this strategy? Let's look at it. In this situation, the client, assuming that the mortgage is $500,000 and the limit is $600,000. So let's just assume that they can put in 10% of their original balance into the mortgage as a prepayment. That means 10% of original balance is $600,000. So they can put down $60,000 into the mortgage here. So the limit, you just basically use your money, $60,000 here, and put it over here. Let me see if I can't have a thing. But anyway, you get the idea. You use $60,000 here. You ask the client to draw down $60,000 here. And you go to the bank and say, hey, I want to do a prepayment. In fact, I think you can do it online. You want to do a prepayment of the mortgage, right? So instead of $500,000, after you do a prepayment, how much is the mortgage left? $440,000. Am I correct? Right? $440,000. And the line of credit let's just assume that it is 2.5% right now. I know it is a little bit higher maybe, or it is not, doesn't matter. Depends on when you are watching the YouTube video. But after you put it down, $60,000 here, the mortgage would only be left at $440,000 at 3%, and the line of credit is used. However, the plan, the home line plan, or the whatever plan it called, you can also fix that portion of the line of credit. And once you fix it, you are fixing at the current market rate. So assuming the current market rate is 2.5% right now, then you basically move this line of credit over here back to this side, right? So in total, the $500,000 original mortgage here at 3% become $440,000 mortgage at 3%, and a second tier is only one charge, but there's a portion of it, $60,000 at 2.5% at the current market rate. And do you remember that there is always the limit? Here becomes $600,000. So the line of credit would become back at $100,000, right? So it will change back to $100,000 because now your mortgage is $500,000. Let's just say that next year the interest rate dropped to 2% market rate. You can do it again. So actually this one, my bad, I forgot to change this. This is not $440,000. It should be $380,000 there, right? $380,000 there. So the mortgage is at $380,000 at 3%, $60,000 at 2.5%. You move another $60,000 next year over here, and assuming the market rate at that time is at 2%, and you fix it at 2%, the line of credit become again $100,000, right? Because all this three combined, if this is 380 plus 60 is again $500,000, and this again will remain $100,000 limit unused. Okay, so that way, do you see that on the left hand side, after 2 years, it changed the mortgage from 3% average down to 3% and 2.5% with a portion, and then 3%, 2.5% and 2% at another portion. So the interest rate of the whole mortgage of the whole $500,000 now has become lower interest rate. But does the client has to pay a single penny of penalty? No, because you are utilizing their prepayment privilege every single year. So now it's December 23rd. If you want to teach your client to do it, go to the bank and do it December 24th, December 20, I think the 27th, 28th is a holiday, whatever, 29, 30, 31st, go do it before the end of the year, because otherwise there would be one tier that you will not be able to utilize, and you will have to wait a whole year to do that. And that's hopefully, and that's the reason why I do this video right now instead of doing the part 2 of how to choose the right mortgage brokerage for you. I hope this does not overwhelm you, because this is a little bit of a complex concept. For those who understand that concept and understand that, you can go ahead and teach your client to do it. For those of you who still have some question about it, feel free to take a look at the description of my YouTube video. Try to contact me. and I will try to answer you on a one-on-one basis. The best, I think, this type of thing is to join my membership, and we can talk in a small group setting. We are going to go through a lot more complex idea like this one in the Q&A session. I have, last week give ideas of how to calculate a tricky, income, what kind of income to use a TDSR. Is very fun. Like all of the students have a different answer, but there's no right or wrong answer. We were just discussing what kind of income are we going to use in a case that is a little bit tricky. So I hope all of you enjoyed this video today. If you guys like it, subscribe, like the video. I just want to say thank you one more time, because without you guys, my YouTube channel cannot have so much subscriber and so much watch time. Now I just reached the milestone that I can monetize it. So I think you guys might have seen some advertisement popping up from my video here and there, and that just basically means that it helps me a lot too. Okay, so I guess this is my last video of 2020. I would like to say Merry Christmas to all of you. I hope each and every one of you in 2021 the best year ever. I hope in 2021 I will teach you much more, and I hope by watching my video and coming to my workshop and all that, I will make you a mortgage superstar in 2021. Okay, so that's it for this year. I will see you next year. Okay.